Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I have a brilliant video lined up for you today, guys. Something a little bit different. And behind me, or in front of you, we have the unemployment levels. This is for the US. Now, why the hell am I showing you the unemployment levels? You know, this is a crypto channel. Those of you that watch me regularly will know that we do cross-market analysis as part of sort of compounding and coming up with our theories, our ideas on the markets. We think there is a correlation between markets. And the reason there's a correlation between markets is because it's the same thing that moves every single market. It is indeed money and the supply of that money and where potentially it is flowing, this concept of liquidity, so that we know that markets are tethered in some ways. Of course, they move very differently at different times and for different reasons. But generally, you know, this concept of liquidity is an important one. And we've really spoken about how in a environment when you have a very high debt to GDP or a very high global debt level, upping interest rates are, I would say, almost more detrimental today than they were in the Volcker years. And we know that not only are interest rates set to continue, but they are set to stay at these high levels until we see, you know, that target of 2% inflation. This takes liquidity off the table. It goes back into the debt markets. And the reason I wanted to bring up the unemployment chart is because I want to show you the correlation between the S&P. We have some absolutely breaking news in regards to Amazon reportedly planning to lay off about 10,000 employees starting this week. This is so breaking news, guys, that CNBC haven't even been able to write a story on it yet. So let's get to why I'm showing you the unemployment rate. And this is one of many reasons. The liquidity aspect, which I briefly mentioned, but we may do a whole separate video on liquidity, how it works and why, as an investor, it's what I really pay attention to. I think if you can crack that liquidity game, if you can really understand this concept, in many ways, it's kind of like a philosopher's stone in the sense that, you know, you'll be able to front run, just like back in November, the crypto markets and markets generally front run rate hikes because they knew that it was a reshuffling of liquidity that had taken place. But we're really just going to focus on unemployment, which is in red. So I'll just give a brief explanation of this. When the price goes up, or the chart goes up, unemployment is going up. And when it comes down, unemployment's at lows. And there is a correlation, a very important one. This was shown to me actually by the Market Sniper ages ago. Not spoke about it since, but something that's been on my mind, certainly with news regarding Amazon. We can look at some Disney, and of course, we know what happened with Twitter news there. The layoffs are coming, ladies and gentlemen. It's my opinion that we are entering a recession, and a recession that we are pretty much at the start of. You know, speaking to people on a daily basis, even in regards to their mortgages, I don't think that has been felt yet. I don't think these rate implementations have really been felt yet, and you know, they're actually set to get worse. And I think there's going to be a real pinch on consumers, which is one aspect of liquidity, and also, you know, corporations, even the likes of the Fed, in regards to having to now repay these debt markets. You know, credit card debt is absolutely flying at the moment, and I believe that, you know, what's going to happen here is very similar to what happened in 2008. We've often said, and you know, we were calling, you know, well up here for the S&P, further downside, and that this situation was going to get worse because we understand liquidity. But I really want to, you know, just look at the correlation here and then go into some of the news and what we're seeing sort of on the front lines. And the fact that if this is anything to go by, ladies and gentlemen, we are at the very, very sort of early-ish stages of a recession and potentially more or further downside, I should say, if the correlation between unemployment and the stock market is anything to go by, you know, on the cards, on the horizon. So let's get into it. So let's just look at the unemployment chart. You know, when it goes up, unemployment's going up. When it's down, unemployment is down. And unemployment right now is at some really, really low levels. It's at this sort of pre-March 2020 levels. And this big spike here, of course, is March 2020 when essentially went into lockdowns and everything got shut down. Unemployment went through the roof, and then it went straight back down. And you can see that, unemployment's been at, some pretty good levels before. It's been lower than this, but it's also been higher. And then we're going to pull up the S&P, and we're going to look at the correlation here. So essentially unemployment at a low timed, we'll go back and then we'll look at the most recent one here, timed the high of the market before March 2020. Then of course unemployment spikes up, and peak unemployment times the bottom before we see that reduction. Okay, let's take a look at some other examples. We can then see, one of the sort of big ones that we had, another market low, was going into the 2008 financial crisis. Bear in mind, this was actually also predicted by the yield curve. We're going to leave the yield curve for now, but it's something that we've looked at, again, as cross-market analysis, crypto investors and traders. Everything we do is in the crypto space, why the name of the channel is All in Crypto. But we do explore other markets to kind of give us potentially some sort of direction or heads up or foresight with what our market may or may not do. So we can see, again, we have another low point, and the correlation here is that the stock market is at a high right before a sell-off. Okay, and as unemployment ticks up, there's a very, very good correlation between the stock market coming down, so markets coming down, and vice versa. If we go to the high here, you can see that as unemployment starts to come back down, the market starts to recover. And it's not a perfect bottom when unemployment is at an all-time high, but it's very close. And this is something you guys should be watching as part of market technicians, as part of market analyzers. We cannot just watch our own market, because this year has shown us, if nothing else, that we are now moving and dancing to a macro beat, and we know what's happening there. We talk about it every day on this channel. So we've looked at the prior low in unemployment right before the March 2020 sell-off. We looked at the prior low before that, which was, of course, leading in 2008. And then we got the dot-com boom. So we have peak unemployment basically perfectly at the top of the stock market. And then we see unemployment start to sharply rise, and the stock market doesn't start to properly recover until unemployment tops out. So you can see the correlation that I'm getting at here. It's been very much the same all the way back. It's quite self-explanatory that, unemployment is a metric used to weigh up the economy, how it's looking, the free flow of capital, cash, people are employing, expanding businesses, so on and so forth. And I would argue that the environment that we're going into is very much the opposite of that. And we are still at a very low unemployment. Now, there's a number of reasons for this, and a number of reasons why potentially we've seen unemployment climb even though the stock market's done what it's done. And that has everything to do with the fact that we literally shut things down for nearly 2 years. And there's still a reopening of that and an adding of jobs that are, coming back into the fold and still sort of trickling in, if you will. The problem for me is, just like with, and this is the whole reason I made this video, Amazon reportedly planning to lay off about 10,000 employees as they start to feel the squeeze, as their profitability in this environment wanes. They have to find that from somewhere. We also had Disney. Disney plans hiring freeze, layoffs, and cost cuts, according to the memo from CEO Bob Chapek. I'm probably saying that wrong. This was on Friday. Disney plans to freeze hiring and cut some jobs, according to an international memo. The move comes after Disney reportedly disappoints quarterly results, sending shocks through the company. CEO is essentially saying this. We know that Elon Musk essentially reduced 50% of the Twitter staff. He's now cut something like 3,200 contractors. And this is a theme that we see, bearing in mind unemployment is where it is right now. And I'm saying that if markets were to go and push on higher, well, this correlation would mean we have to come down and make an even lower low on unemployment. And I think that, does that look likely given the situation we're in? And are we about to see unemployment really start to tick up? This would have very, very negative repercussions for the market and sort of further looking at the S&P, and this isn't compared to Bitcoin, but Bitcoin has had, there is a correlation. We know last week things were a little bit less correlated given the FTX situation, but can you see where I'm really going with this and how I'm trying to piece things? And this is just one thing that makes me bullish in the short to mid-term. Bearish, sorry. There are many others, like, you know, we're really following liquidity, we're following rate hikes. Why did markets rally on the CPI? Well, they rallied for a very simple reason, and that is that we essentially lost in terms of future planning for Fed funds rate around about 50 basis points, which means that that 50 basis points worth of global debt or US debt doesn't have to go to the debt markets, it can flow somewhere else, and there's a repricing of markets as a result of this. So it's all very correlated and interlinked, and this is the kind of third dimensional game you're playing as an investor and a trader. Is you have more than one thing to watch, and this is really just, in my opinion, a broad look at the economy and where it's potentially heading, where the stock market is heading, and everything else. And I think, you know, this really inspired me to make this video and check up on this again, because I do think we're still at a low, and I think we are going to see unemployment really rack it up. And we know what the kind of correlation here is that we've seen. So also a good metric to look at if you're trying to time bottoms, when you get to a high point and you start to retract and see a fall in unemployment, well, that may give you some indication of how the economy's doing, and this kind of you know, barometer to kind of weigh things up of and where you may or may not want to be investing. The thing with unemployment ticking up is it will also steer the Fed, and I think that what we're moving away from now is this inflation story, which is very negative and it's causing the Fed to do this, to now deflation, where I think we're actually going to have persistently high inflation, but deflation elsewhere other than, you know, the CPI and where it's necessary. We are going to see certainly certain things come down, and inflation as a whole, we're already starting to see it's somewhat trending downwards, but it's still a very fragile subject, and I think they are dreaming to think that they're going to get to 2%, and something is going to break well before that takes place. That's my suspicion. And if you look at, let's just pull the S&P up. Let's remove this draw. If you look at where we are today, in my opinion, it's very similar to where we were in 2008. You know, and then we bring in the unemployment and we look at that. It's very similar to just before we have this drop, and this could be in the form of the Fed breaks. And we've seen capitulation in the crypto markets. We've seen, you know, stock market today is still, it's got to be 23, 24, or 17% down. Okay, I'm talking about its all-time low. 17% down, given what's happened, I don't think is a really a good repricing. In actual fact, it's not too out of the realms of anything that we've seen before. I'm going to argue that this is vastly different, the situation that we're in from 2008 onwards. We've essentially just been given QE, quantitative easing, quantitative easing, quantitative easing. The money supply continuously inflated. We are in this may be, you know, quite fearful, but I think we're in a situation where things are vastly different from this environment that we've been in from 2008 onwards. And to just have a normal pullback from 2008 standards, I think that lets the Fed know that they can keep their foot on the gas. And that, you know, I don't think we've seen the fallout in the stock market and the other markets. We may have seen it in the crypto space. Just a perfect example of how markets have moved together, guys. Follow the money supply and you'll come to the same conclusion. But we may have seen that capitulation in the crypto space. The problem for me is we haven't seen it elsewhere. And I think that there's going to be contagion. I think we're going to be in sync, very much so, with the traditional markets. If there is some sort of a, you know, crunching event, if there's failure, if there's a liquidity squeeze or whatever it may be, our market will not escape the wrath of that. Now, it doesn't mean it's going to go down in the same percentages. It may actually show some strength against the traditional markets. But in my opinion, it will get affected. Going back to the start of the video, looking at unemployment and looking at where we're currently at. And this was really inspired. Like I say, this is breaking news, guys. If you can do me a favor, hit that like button, leave me a comment, whatever it is. It just helps with the algorithm, and share this video about to get this out to people, because this channel aims to be completely separate. I am what I say I am. You know, I am a trader. I am an investor. This has been really my life's work for the past 5 years, becoming these things. And it's something that I see a long, bright, hopefully, future for myself in. So we really want to separate this channel and provide you guys with valuable content that nobody else seems to talk about, that you know, maybe help you guys navigate what is a very treacherous sea at the moment. Again, Disney, Elon Musk with Twitter, you know, this is Meta. This is going throughout the entire sort of tech stock space. We're also seeing it in many other areas, whether that be banks, Barclays, you know, so on and so forth. So I'm here to argue that unemployment is going to start to rise, and we've gone through the correlation that has with the stock market, and that is going to have contagion into the cryptocurrency market, in my opinion. And you know, that's really the bulk of the video. Hopefully you found this useful, entertaining, and informative. If you have, like, it's always appreciated. So as a comment, I'm going to love and leave you on that note, guys. All in crypto here, and that was the video. See you in the next one.